Hello friends, Victor here. Welcome back to the Intelligent Investor channel. In today's video, I'm going to analyze AMD stock. I will talk about whether AMD is still a buy right now, or it's better to wait until it becomes undervalued again. More importantly, many investors want to know, are we in an AI bubble right now, or will the current AI boom continue? So in this video, I will explain why I believe the current AI boom will continue for at least the next 3 years and why it's completely different from the dot-com bubble of the late 1990s and early 2000s. To give you more context, OpenAI and AMD recently announced a major partnership to deploy 6 gigawatts of AMD GPUs over the next 5 years. This will start with AMD's upcoming MI450 GPUs and rack-scale AI systems that will be deployed in the second half of 2026. In return, AMD has issued stock warrants to OpenAI for up to 160 million AMD shares. This is roughly 10% of AMD's outstanding shares. These stock warrants will remain active for about 5 years until October 2030. This deal is a huge win for both companies because AMD will start generating tens of billions in AI revenue starting in 2027, while OpenAI will have much more computing capacity to serve its large customer base. More importantly, if this deal is successful, AMD's total value will likely double or even triple over the next 5 years. More on this later. Interestingly, right before I started making this video, OpenAI also announced an even larger 10 gigawatt deal with Broadcom to co-develop and deploy custom AI accelerators and rack-scale AI systems over the next 4 years. Now, a lot of investors are starting to worry that OpenAI and its major partners might be creating an AI bubble. They think companies like NVDA, OpenAI, Oracle, SoftBank, AMD, and now Broadcom are simply circulating their investments around and using vendor financing to increase their revenues and market values at the same time. So in this video, I will talk about whether we're really in an AI bubble. Moreover, I will discuss AMD's biggest risk, AMD's financials and long-term growth prospects, AMD's stock valuation, and whether I plan to buy more AMD shares going forward. If you enjoyed this video, make sure to hit the like button, subscribe, and turn on notifications. I will continue making high-quality investing videos every week that will help you become a great investor. You can also follow me on X at Vic Investing. I always share more investing insights and updates on the stocks I'm most bullish on there. Each video usually takes me more than 30 hours to make, so if you'd like to support the channel, check out my Patreon in the video description. Our goal is to help all our members become multimillionaires through intelligent investing. As a premium member, you'll be able to follow all my latest stock trades and portfolio rebalancing. You will get access to my intrinsic valuation models for all the stocks I'm analyzing, so you will know when a stock becomes undervalued, fairly valued, or overvalued. On top of that, you will receive my latest stock ratings, exclusive premium content, and access to our Patreon-only Intelligent Investor Discord community. All the links to my Patreon blog and my X account are in the video description. Make sure to check them out. Now let's go back to AMD. I want to start by talking about the biggest risk we should consider first. Right now, many investors believe the market is heading into an AI bubble, similar to the dot-com bubble in the late 1990s and early 2000s. Here's my prediction. I believe the market will eventually correct in a few years, just like most business cycles. But I don't think we're in an AI bubble right now. Here's why. First, many investors and skeptics who are bearish on AI are often the ones who have been sitting on the sidelines and missing out on the best AI companies like NVIDIA, AMD, Broadcom, TSMC, Google, Microsoft, Meta, and Palantir. These skeptics and the media keep pushing the narrative that we're in an AI bubble. They don't understand that the current AI boom is completely different from the dot-com bubble in 1999 and the early 2000s. Second, many investors believe that most AI companies are overvalued, just like internet companies during the dot-com bubble. That's simply not true at all. Let's take the hyperscalers, including Microsoft, Google, Amazon, Meta, and Oracle as example. They're driving most of the AI capex spending. If you look at their 4Ps over the next 2 years, you'll see that they're often lower than Walmart and Costco and other non-tech companies in the S&P 500. More importantly, their expected revenue and EPS growth rates over the next 2 years are often much higher than most non-tech companies in the S&P 500. Of course, NVDA is the biggest winner in this AI revolution. NVIDIA dominates the AI accelerator market and supplies more than 90% of the most advanced AI systems to the hyperscalers and AI companies. NVIDIA's 4P is often lower than Walmart, Costco, and many non-tech companies in the S&P 500, while its expected EPS growth rate is often much higher. Third, during the dot-com bubble, most internet companies did not even have a proven business model. Many of them were just startups with a .com in their names, generating little or no revenue, burning through cash, and surviving only on IPOs, VC funds, and debt financing. So when the .com bubble burst, those unprofitable internet startups could not raise more money from VC firms, and most of them eventually collapsed. In comparison, today's AI boom is mostly led by the largest and most profitable hyperscalers and mega-cap tech companies in the world. For example, Microsoft, Google, Amazon, and Meta all have exceptionally strong balance sheets, and they all generate massive free cash flow every year. They're essentially using most of their own cash flow to fund their massive AI capex instead of using debt. The only major exception is Oracle. Oracle is taking on much more debt to fund its AI capex. These hyperscalers are not going out of business because they're already the dominant leaders in their sectors. And if they see that they're not getting enough returns from their AI investments, they will simply slow down their AI spending. That's why I don't think this is an AI bubble. Fourth, skeptics and the media often compare today's AI infrastructure build-out to the massive fiber optic build-out during the dot-com era. This comparison is completely wrong. Here's why. Back then, telecom companies and startups spent hundreds of billions of dollars laying down fiber networks across the US, betting that internet traffic would explode right away. They were right about the internet's long-term potential, but they invested too early. So what was the result? Those fiber optic networks ended up being massively underutilized for many years after they were built. Their logic was very simple. If you build it, demand will come. But they didn't expect that the massive internet demand did not happen right away. So in comparison, today's AI infrastructure build-out is being driven by real and existing AI demand and frontier AI models such as OpenAI's ChatGPT and Sora, Google's Gemini models, Anthropic's Cloud models, Meta's Llama models, and xAI's Grok models. Almost all the major hyperscalers and AI companies are compute constrained right now. They simply do not have enough computing capacity to meet both their internal AI workloads and their customers' AI workloads. That's why they're investing hundreds of billions of dollars to expand their AI infrastructure, converting traditional CPU-based data centers into GPU-based AI data centers that are powered by NVIDIA, AMD, and custom ASIC chips. So unlike the dot-com bubble, today's AI investments can be monetized almost right away after deployment. Typically, once hyperscalers deploy more AI systems and expand their computing capacity, they can often turn their AI investments into revenue very quickly because their customers need much more computing power for their AI workloads. And finally, there's another factor that is preventing overbuilding. Power is the biggest constraint in building AI data centers. Hyperscalers cannot just build gigawatts of AI data centers overnight. It takes many months and years to find enough power and grid to support these gigawatt-scale AI data centers. In other words, this huge power constraint is preventing hyperscalers from overbuilding AI data centers. This prevents the massive oversupply that we saw during the dot-com era. That's why I believe the current AI boom is not a bubble. It's driven by real AI demand that's already here. And most of the AI spending is coming from the largest and the most profitable tech companies in the world. plus the power constraint is actually keeping the hyperscalers from overspending on AI infrastructure. Now, what other risks should we consider for AMD? I think the biggest risk is that the current AI ecosystem is heavily dependent on OpenAI. All of these companies, from chip makers to cloud service providers, need OpenAI to succeed so they can earn much higher revenues and profits. AMD's AI revenue will be largely dependent on OpenAI in the coming years. OpenAI develops some of the most advanced frontier AI models and owns the most popular AI apps like ChatGPT and Sora, which together have over 800 million weekly active users. More importantly, OpenAI has signed massive infrastructure agreements with Oracle, SoftBank, Microsoft, Google, CoreWeave, NVDA, AMD, and Broadcom. These infrastructure agreements are worth well over $1 trillion in total. Many investors, skeptics, and even Wall Street analysts believe that OpenAI, NVIDIA, Oracle, and other key partners are simply recycling their money, circulating value and investments to inflate their market values. In my view, this is not true at all. It's purely FUD or fear, uncertainty, and doubt. Circulating value is a false narrative spread by many skeptics, the media, and even many analysts who don't fully understand the current AI revolution. What they don't understand is that these massive investments are meant to help OpenAI grow into a hyperscaler like Google or Meta, and to help OpenAI build out gigawatts of AI data centers. For example, NVIDIA plans to invest up to $100 billion in OpenAI over time to help it deploy at least 10 gigawatts of computing capacity. But this is not free money at all. NVIDIA will invest gradually only as each gigawatt of capacity is successfully built and brought online. The first gigawatt is expected to come online in the second half of 2026. In other words, OpenAI will only receive additional funding from NVIDIA if it delivers and continues building additional gigawatts of computing capacity. Now, to do that, OpenAI still needs to generate much higher value and raise significantly more capital from investors to fund those massive data centers. I believe this clearly shows that the idea of circular revenue between OpenAI and its partners is completely wrong. Moreover, based on OpenAI's recent partnerships with Broadcom, AMD, NVIDIA, CoreWeave, and Oracle, the company plans to build at least 30 gigawatts of AI data centers over the next 5 years or longer. According to Jason Huang, building 1 gigawatt of AI data center capacity typically costs around $50 to $60 billion, including the cost of buying AI systems. So if all 30 gigawatts are fully deployed, the total cost should reach around $1.5 trillion. The biggest question now is, how will OpenAI fund such an enormous AI build-out? Interestingly, just before I started making this video, Reuters reported the same thing. OpenAI is working on new revenue lines, debt partnerships, and planning further fundraising as part of a 5-year strategy to cover more than $1 trillion in pledged spending. In other words, OpenAI knows that its current revenue will not be enough to cover more than $1 trillion in infrastructure spending over the next 5 years. To achieve this scale, OpenAI will need to raise much more capital through both equity and debt financing. Now, I shared this in my previous video. According to a recent report from The Information, OpenAI has raised its revenue forecast from 2025 all the way through 2030. The company now expects that its annual revenue to reach $13 billion in 2025, $30 billion in 2026, and as much as $200 billion by 2030. OpenAI plans to fund its massive AI infrastructure expansion using its projected revenue growth plus additional funding from investors. I've said this many times before. OpenAI has become too important to the entire AI ecosystem. It now works with almost every major tech and chip company. As long as OpenAI keeps releasing more powerful and more capable frontier AI models and AI applications, it will continue attracting more users, generating much higher revenue over time, and securing additional funding from investors. And if OpenAI needs more capital, its major partners such as Microsoft, SoftBank, and NVIDIA, Thrive Capital, and many VC firms will continue investing in OpenAI until the company becomes profitable. Interestingly, Reuters reported that Anthropic is on track to meet an internal goal of a $9 billion annual run rate, or ARR, by the end of 2025. For 2026, Anthropic has set an even more ambitious targets, a base case of more than doubling to $20 billion in annualized revenue, and a best case of up to $26 billion ARR. In other words, both OpenAI and Anthropic are becoming the fastest growing software companies in recent history. Moving on, let's talk about AMD's financials and its long-term growth prospects. I'm going to explain why I believe AMD's market value should eventually double or even triple over the next 5 years. As of now, AMD's market cap is near another all-time high, around $380 billion, mainly because the company recently won a massive deal with OpenAI to help deploy 6 gigawatts of AMD GPUs over the next 5 years. This is a huge win for AMD because it suggests that the company will likely become a much larger player in the AI accelerator market, which has traditionally been dominated by NVDA. Currently, AMD's trailing 12-month or TTM revenue is about $30 billion. If all 6 gigawatts of AMD GPUs are deployed, AMD's total value should reach as high as $100 billion by 2030. If this happens, AMD's market cap will likely reach as high as $1 trillion by then. More on this later. AMD also maintains a very strong balance sheet. As of now, AMD holds around $5.87 billion in cash and short-term investments, while carrying roughly $3.89 billion in total debt. This means AMD can pay off all of its debt in advance and still have around $2 billion in cash left. Now, like most semiconductor companies, AMD's business is by nature very cyclical. Its revenue depends heavily on the overall PC market, the data center market, and its product roadmap. For example, over the past 5 years, AMD's revenue and operating income growth have been very cyclical. Similarly, AMD's operating cash flow and free cash flow have also fluctuated significantly during the same period. AMD's gross margin, operating margin, and free cash flow margin have all been very cyclical during the same period. In investing, you have to look forward and not backward. AMD is basically following NVIDIA's strategy to become a full-stack AI infrastructure company. AMD's biggest growth driver will be its AI data center business, followed by its client and gaming business. Looking ahead, I believe AMD's revenue growth, operating income growth, and margins will improve much more over the next 5 years, mainly because AMD recently secured a massive 6 gigawatt deal with OpenAI. Moreover, just before I started making this video, Oracle announced that it will deploy 50,000 AMD MI450 AI GPUs starting in the second half of 2026. This is another major win for AMD because it shows that the company is becoming a major player in the AI data center market. The company will likely capture more market share over the next few years. NVIDIA currently has over 90% of the AI accelerator market. Most hyperscalers and AI companies are looking for the best alternatives to NVIDIA because they don't want to rely 100% on NVIDIA. They don't want NVIDIA to monopolize the entire AI infrastructure market. NVIDIA's AI systems are extremely expensive, even though NVIDIA's AI systems tend to have the best performance per watt and the best performance per dollar investment. AMD is currently the best alternative to NVIDIA, so it makes sense for OpenAI, Oracle, Meta, and other hyperscalers to invest in more AMD GPUs going forward. This keeps NVIDIA in check and ensures that it doesn't monopolize the entire AI data center market. Now, according to this consensus forecast, AMD's total value is expected to grow to around $33 billion this year and $56 billion by fiscal 2027. More importantly, based on a recent revenue forecast from Bank of America, AMD's total value is expected to triple, increasing from about $33 billion in 2025 to as high as $100 billion by fiscal 2030. Of course, this revenue forecast assumes that OpenAI will successfully deploy the full 6 gigawatts of AMD GPUs over the next 5 years. In comparison, if OpenAI doesn't deploy any AMD GPUs over the next 5 years, Bank of America still expects AMD's revenue to reach around $65 billion by fiscal 2030. In other words, AMD's revenue is projected to at least double between now and 2030, even without including its massive 6 gigawatt deal with OpenAI. Now, there are several important details about AMD's 6 gigawatt deal with OpenAI. I think it's very important to understand these nuances. First, the initial 1 gigawatt deployment of AMD's upcoming MI450 GPUs is scheduled to begin in the second half of 2026. This means AMD should start generating tens of billions in AI revenue from OpenAI starting in late 2026 or early 2027. Second, AMD has issued stock warrants to OpenAI, allowing OpenAI to purchase up to 160 million AMD shares, or roughly 10% of the company's outstanding shares. The first tranche of these stock warrants will vest with the first 1 gigawatt deployment in the second half of 2026. Additional tranche will vest as long as specific milestones are achieved over the next 5 years through October 2030. Now, here's the important part you should know. The final tranche will only vest after all 6 gigawatts of AMD GPUs are deployed and after AMD reach $600 per share. In other words, OpenAI can only buy about 10% of AMD's outstanding shares once it fully deploys 6 gigawatts of AMD GPUs and after AMD's market value hits around $1 trillion or around $600 per share within the next 5 years. If OpenAI can help AMD grow its AI revenue substantially each year and help AMD become a $1 trillion company, I think it will still be a huge win for AMD and its shareholders, even if OpenAI eventually owns 10% of AMD. AMD CEO Dr. Lisa Su said this in a recent conference call.
As part of the agreement to strategically align the interests of both companies, we are issuing OpenAI a performance-based warrant for up to 160 million shares of AMD common stock. Now let me walk you through some of the specifics. The warrant vests in tranches upon gigawatt-scale GPU deployments. The first tranche vests upon deployment of OpenAI's initial 1 gigawatt purchase, and subsequent tranches vest at major deployment milestones, with the last tranche vesting only after the deployment of all 6 gigawatts of GPU compute. Importantly, the vesting of each tranche is also directly tied to increasing AMD stock price milestones, with the final tranche vesting at a price of $600 per share. And to further align our interests, exercise of the warrants are tied to OpenAI achieving key commercial and technical conditions that are important to ensure the success of their AMD Instinct deployments. This unique structure tightly aligns OpenAI and AMD, driving significant revenue and earnings growth for AMD, while allowing OpenAI to accelerate their AI build-out and share directly in the upside of our mutual success. To provide some context on the financial aspects of the agreement, overall, we expect this structure to be highly accretive to our revenue growth and earnings and create substantial long-term value for AMD and our shareholders. From a revenue standpoint, revenue begins in the second half of 2026 and adds double-digit billions of annual incremental data center AI revenue once it ramps. And it also gives us clear line of sight to achieve our initial goal of tens of billions of dollars of annual data center AI revenue starting in 2027. Overall, we expect it will be highly accretive to AMD's non-GAAP earnings per share immediately from first revenue. We also believe that with the massive scale of this deployment and the strong benefits to the overall AMD AI ecosystem, this partnership will enable additional revenue from existing and new customers deploying at scale and has the potential to generate well over $100 billion in revenue over the next few years.
I want to show you this forecast from AMD. AMD now expects the AI data center total addressable market, or TAM, to reach over $500 billion by 2028. Meanwhile, NVIDIA's forecast is much more aggressive. NVIDIA expects AI infrastructure spending to reach between 3 and 4 trillion by 2030. This number is much higher than AMD's forecast because it includes global public cloud, private cloud, enterprise on-premise servers, and edge computing, and not just AI accelerator spending. Now, if you want to understand whether AMD will continue to grow over the next 5 years, you will need to look at its product roadmap. AMD's product roadmap is most important because it shows whether AMD can keep gaining market share and drive higher revenue growth in the coming years. According to this AI chip roadmap, AMD plans to release its rack-scale MI400 system in the second half of 2026. This will compete directly with NVIDIA's next-gen Vera Rubin platform in 2026. After that, AMD plans to continue its annual product release cycle and launch the MI500 AI system in 2027. This will compete against NVIDIA's Vera Rubin Ultra platform in 2027. Based on what I know, AMD's upcoming MI400 Helios AI system will be the company's first rack-scale AI platform that will be capable of connecting 72 AI GPUs into one single server rack, just like NVIDIA's rack-scale AI system. AMD's upcoming MI400 system is expected to be very competitive in AI inferencing workloads because it will likely have larger HBM4 memory capacity and higher memory bandwidth than NVIDIA's Vera Rubin platform. I believe this is why AMD was able to win the massive 6 gigawatt deal with OpenAI, along with another GPU deal with Oracle. If I had to make an educated guess, I believe AMD will likely continue winning more major deals with OpenAI, Oracle, Meta, and Microsoft in the coming years because the company is planning to release new rack-scale AI systems every year that will be much more powerful and more energy efficient. This is very similar to NVIDIA's annual product cadence strategy. For example, as I mentioned earlier, AMD is expected to launch its MI500 Volcano AI system in 2027. This will compete directly with NVIDIA's Vera Rubin Ultra platform. The biggest challenge for AMD is that its ROCm ecosystem is still far behind NVIDIA's proprietary CUDA ecosystem. NVIDIA's AI software libraries, developer tools, and supports are far more mature and advanced than AMD's ROCm ecosystem. Moreover, NVIDIA's CUDA accelerated computing platform remains the industrial gold standard for most high-performance computing, HPC, and AI workloads. This is why I believe NVIDIA will continue to maintain roughly 80% to 90% of the AI accelerator market, while AMD should capture around 5% to 10% of the market in the long run. Now let's talk about AMD stock valuation. At the time of making this video, I believe AMD stock is overvalued. For example, if you look at our upcoming investing app here, you will see that AMD stock price, as represented by the blue line, is currently well above its fair value, as shown by the orange line. Right now, AMD's fair value should be around $195 per share. Typically, I like to buy the dip only when the stock is fairly valued or undervalued. I don't like to overpay the stock even for an outstanding company like AMD. I also calculate AMD's intrinsic value using this intrinsic value model. I always use it for every stock I analyze to find out whether a stock is likely undervalued, fairly valued, or overvalued. If you like to access this intrinsic value model, you can download it from my Patreon blog. The link is in the video description. In this model, I estimate that AMD's revenue should grow at a compound annual growth rate or CAGR between 20% and 25% over the next 5 years. This is slightly below the consensus revenue forecast I showed you earlier. I also assume that AMD's free cash flow margins will continue improving over the next 5 years because AMD's data center business will continue to scale as the company deploys more rack-scale AI systems for OpenAI, Oracle, Meta, and other hyperscalers. Now, since this video is getting long, let me show you a quick summary here. Based on my intrinsic value calculations, I estimate AMD's intrinsic value around $216 per share. For comparison, Morningstar estimates its fair value at around $210 per share, while our investing app estimates AMD's fair value at around $195 per share. This gives AMD an average fair value of about $206 per share. This means I believe AMD stock is currently a bit overvalued. So will I buy AMD stock? My answer is yes, but only when AMD becomes fairly valued or undervalued again. I actually made the mistake of selling half of my AMD shares recently for a quick profit. So my plan now is to double or even triple my AMD position once AMD is more fairly valued or even undervalued again. Here's my long-term view. I believe the AI accelerator market will turn into a two-horse race between NVDA and AMD, which will be similar to the consumer GPU market. I believe NVIDIA will continue to dominate and hold around 80% to 90% of the AI accelerator market in the long run because of its CUDA ecosystem and its annual product cadence to stay ahead of competitors. As for AMD, I believe it should capture around 5% to 10% of the AI accelerator market over time because the company will continue to release more competitive rack-scale AI systems every year to target the AI inferencing market. All the hyperscalers and AI companies like OpenAI, Oracle, Meta, Microsoft, and others are actively looking for the best alternatives to NVIDIA because they don't want NVIDIA to have 100% of the AI accelerator market. And right now, AMD is the best alternative to NVIDIA in the AI inferencing market. This is why I believe the hyperscalers and the largest AI companies will keep investing in AMD's AI systems in the coming years. Now, everything I've shared here is just my opinion based on my own research and analysis. This content is for informational and educational purposes only. It's not financial advice. There are always risks in investing, so it's very important to invest in what you know and not speculate. Always do your own research and thorough due diligence first before making any investment decisions. Thank you for watching this video and supporting our channel. This is Victor from the Intelligent Investor channel, and I will see you in the next video.